Joining me on this edition of Markets Tomorrow, we've got a couple of powerful voices. Jyoti Jaipuria, Head of Research, Bank of America Merrill Lynch, Ashwini Gujral, Fund Manager with ashwinikujral.com, and Sandeep Sabharwal, Market Expert and indeed one of the best stock pickers in Indian equities. But before I start my panel discussion, here's a look at how things shaped up for Indian markets for the day gone by. Nifty has managed to close just a shade above 6,200. NBFC stocks were in demand today. Mahindra & Mahindra and Bajaj Finance, they had a decent start. Wipro was up after a small acquisition news. Capital goods stocks across the board, while the party continues for them. BHEL, Thermax and Crompton Greaves. Bajaj Auto, however, cracked after poor set of dispatch numbers. So auto in last 2-3 days are looking slightly jammed. Dispatch numbers are not way below market estimates, but clearly the pain is not over for autos as a group. Now the good news is that even though some cyclical stocks corrected, metal, which is considered as a high beta and highly cyclical sector, did exhibit some momentum. So it was okay day for GSPL. Tata Steel gain was one of the prominent gainers, followed by DLF. Private banks are losing some momentum, and it is evident because IndusInd Bank had a good Tuesday but a flat Monday. L&T more like an odd one out on a day when names like Crompton Greaves, Siemens and Thermax have gone up. L&T had a bad day. Sesa Sterlite also did manage to correct and saw a rub of red in the dying minutes of trade. So how should one dissect into today's price action? Are markets really pricing in a strong election verdict? And in terms of pure fundamentals after the recent run-up, how should one read into market valuations? So with that broader sketch, let me now start the show and let me kickstart the panel discussion with Ashwini. Ashwini, let me start the panel discussion with you. How would you assess today's price action? Nothing special for the Nifty, nothing big in the index, but individual stocks, they continue to move from strength to strength.
See, that was the view in the morning, and that's how it played out, just a 30-point range throughout the day. But there was enough action in several sectors, so that's how chances are it should remain. And even post-election results, I don't think 6,000, 6,300 will be substantially broken on either side. I think post this results, now the market will position itself for the May election. And that will be by being sideways for that entire period, sometimes in 6,000, 6,300 range, at other times between 57 and 6,000 range. So basically ranging markets till the big news comes in and the market is able to make the large move on either side.
Well, so far nothing is there on the horizon also which really will generate upside momentum, but like Ashwini pointed out, the outcome of assembly election surely will inject some degree of volatility. Jyoti, what do you think markets are pricing in when it comes to the outcome of assembly election? Do you think we could be in for a big Nifty swing of about 200-300 points depending on the verdict of assembly elections?
Yeah, one is I think the market is probably getting a bit overexcited about the 8th results, because if we see in the past, there have been many occasions in the past when the assembly elections and the general elections which happened 6 months later, the results were different. I guess the big example was in 2003 and 2004, where, the voters voted differently in both the elections, which were 6 months apart from each other. So I don't think, this is like a real general indicator of what the 2014 election trend would be. It probably gives a bit of indicator. Second is these account for just 12% of the seats in parliament, so it's not like this is a huge amount of seats. So probably there's a bit of, over-anxiety on these results. But if we go back into history, what we have to remember is if we take, the last 6 elections, there always was a pre-election rally. So to that extent, the tendency of the market ahead of any general elections is to go up rather than go down. And most of it happens because people believe that once we have a new government in place, then we'll have more reforms which can really happen. So, that's like the trend which is really playing out now also.
Sandeep Sabharwal, what is your reading? Do you think all the good news is in the price? Markets are running slightly ahead of themselves, or even after the recent run-up in the short term, in the medium term, there is still money to be made?
So I think when we look at markets, what we look at is the recent move, and we don't take into account the long-term move. if you look at the markets from the beginning of this year till now, markets are hardly up 4 to 6% if you look at the Nifty or the Sensex. Whereas I think on the macro parameters, I think things are improving in India significantly, especially on the external front where we are seeing a significant improvement on the current account front. On the growth parameters, I think we are clearly bottoming out in terms of growth. The pickup will be slow, but I think it will pick up post-elections. And if you look at a lot of other parameters like market capitalization to GDP of the country or the kind of governance discount the Indian markets have been getting, I think the markets are not expensive in my view. And I think unlike most other Decembers, the key is that in the short run, this time we have got a lot of events. We've got events in terms of potential Fed tapering, we've got the RBI policy, we've got election results. So a lot of events are stacked up in this month. So this month could be slightly volatile, but I think the longer term picture has only improved for equities.
Well, for the first time, macro data points have surprised everyone on the upside. GDP expanded, CDS contracted. So I would say that after a gap of nearly 2 or 3 quarters, we definitely have got a bit of a macro uptick, and I think it is safe to assume that the worst of the macro reading is behind us, and for the moment currency also has stabilized, and the stability is so strong that Reserve Bank of India is confident that they want to discontinue with their OMC swap window. That just tells you that RBI is also comfortable with the current rupee level. Sandeep Sabharwal, why are capital goods stocks moving up? If I look at the data points, there is nothing in the air which seems to be indicating that the private sector or the investment cycle has started. But these stocks, at least capital goods stocks, have seen a run-up of about 25 to 50% from the recent lows.
I think the story is very clear. In terms of capital goods stocks, most people were building in valuations for these companies in a scenario of no growth to virtually flattish growth or little bit of growth. But what people are now starting to realize is growth has bottomed out. And what we could be actually seeing a year from now, so sitting in December 13, we see that the IIP is minus X% or 0%. But exactly a year from now, as confidence returns and as growth picks up in the economy, we could actually be seeing IIP growth at 5-6%, if not more. And slowly investors are starting to position for that. Finally, if you look at the mid-cap capital good companies or even the large-cap ones, most of these stocks are half or if not lower than their peak values. Some of them are at 20-30% of peak value. So if you look at some of the bigger ones like Voltas and Crompton Greaves, which have moved in the recent past, they don't have any balance sheet issues. They are virtually debt-free, and they are trading at around 25 to 30% of their peak prices. So I think some of these stocks are there to perform, and I think they'll perform even better in the year 2014.
Well, BHEL clearly has been a marked outperformer. So if I have to nail it down to one stock in today's very ordinary market, that's got to be BHEL. 164 rupees for BHEL. Today it has added another 4 rupees. Ashwini, do you think BHEL is doing something special, or it is still in a bear market, but within a bear market it is a very powerful bear market rally?
When something falls from close to 600 down to $100, a rally up to 160 is not exactly, something that you would feel very happy about. I think the key big level on BHEL is probably closer to, this 190-200 zone, where it stuck around for, several times. It, in fact, rallied once from about 200 in about 2008 and went right up to 550. Basically the 2008 low, which was 196, below which it collapsed. We need to reclaim 200, before we say that BHEL has bottomed out and it's going to go back to 500. For the moment, this is a great pullback rally. People who have been stuck or people who bought in at lower levels, I think 165 is the 200-day moving average. That's a good level to take your profits off.
Jyoti, another pocket which has done exceptionally well of late is autos. Why are autos holding on at a time when auto sales are not impressive, urban consumption is slowing down, and inflation is eating into savings?
Yeah, now, autos, like it's a sector which we are very overweight on. But it's a sector which has various segments. So there's some part of auto which is the two-wheelers, which are obviously gaining because of the rural income, and those are the stocks which have done well. Our view is that, auto is one of the best place to start, performing when there's a sector rotation, and that's been the reason we've been pushing it. Because two things. One is, as consumer sentiment changes, the demand outlook improves. Second is, if interest rates peak out, then again, this is one sector which does very well when you start seeing interest rate cuts happening. If we again go back into pre-elections, then autos has been the one sector which, in pre-election has probably been one of the best performing sectors. So again, history, is in line with the auto sector doing well.
Sandeep, for the moment, it appears that we don't have a trigger. The tapering adjustment is over. The earning upside is already priced in. Macros have stabilized, but rupee also has appreciated before macros have stabilized. So what could be the next trigger?
I think the markets don't need a very positive trigger or a negative trigger at this point of time. I think the fact that if tapering just gets shifted to March, which is the most probable scenario given the kind of deflationary outlook which is getting built in these days. So I think Fed will find it very difficult to taper when there is a scenario of deflation. So I think as long as that happens, I think the party will continue. And if we actually look at the Indian perspective, mid of March the elections will get notified. So it just post the announcement of state election result, it's just 3 months to go. And typically, historically also, we have seen pre-election markets do well. And the third factor is, I think, the macroeconomic front, where I think after Raghuram Rajan has taken over, we've seen a huge shift in the way macroeconomic instability is being handled by the RBI, which was clearly missing. They have become much more responsive. And specifically, if you look at markets globally, the central banker is much more important for the markets than the government by itself. So we've got a strong central banker now who understands things much better than what the predecessors did. And hopefully we'll get a much better government after the next elections. And that's what investors should be playing for, in my view.
Ashwini, even though we keep on discussing tire stocks on a daily basis, CEAT is just moving from strength to strength. 2 months ago it was at 150, now it is at 300. Do you think CEAT has potential to go to 330, 340, even 350?
These stocks are extremely cyclical, and you buy these things when times are good, but as long as it stays, say, above 190, 200, it remains in some sort of an uptrend, and a target of about 330 is visible even theoretically. So basically, if you bought it at lower levels, your stop has to be closer to 200 to 220, and maybe around 330, 350. Those would be good levels to take profit.
But Jyoti, beta is no longer considered as a dirty word on Dalal Street. In fact, markets are revisiting companies which have got huge debt on their balance sheet, companies which have broken down balance sheets. So how should one approach the beta end of the market?
Yes, like ultimately when you buy beta and you buy very high debt companies, you're really taking a call that the future is going to be great, because some of these companies, if they can't, repair their balance sheet, what the market is hoping is at some point the stock market does so well that there are lots of these companies which will be able to raise equity and repay their debt and so repair the balance sheet. Now for that you need a real bull market to come, and if that does not happen, then some of these companies will suffer. The other is we've seen some of asset sales happening in these companies. So, either because lenders are forcing them to sell assets, or because we have seen, some of these companies themselves feeling the heat of all the high debt which they have, and so they're trying to repair their balance sheet by sale of assets. So that's the other thing which has helped companies. But, you have to be very stock specific in some of these companies, because many of them, if they can't really do something about their balance sheet, they may, keep struggling for the next many years.
Sandeep, what's your sense when it comes to the beta end of the market? This market surely has rediscovered momentum. Like I said, beta is not considered as a dirty word now.
I think we don't really need to go down to companies which are highly risky also. Even in the beta space, we've got a lot of companies which don't have these kind of debt issues in their balance sheets, but still they are cheap relative to their historical valuations. And as growth picks up, we'll see momentum come back. And in the large cap space also, if we see in the telecom space, we've seen a strong rally this year. And I believe the rally will continue next year. Here also we have a scenario where there's a lot of debt in the balance sheet of these telecom companies. But a lot of enterprise value is likely to get shifted from debt to equity over the next couple of years, and people will make money in that. So you don't really need to take too much risk in this market, even at a level of 6,200, because the broader market still remains very cheap.
That's a great point, that even though we are at a new high, don't take too much of risk, because 80% of the market is sitting at a historic low. So by doing simple things, by buying into safe stocks or beating down stocks, you can still make money. Ashwini, the NBFC end of the market today had a strong day. Both Bajaj Finance and Mahindra & Mahindra Financial, they appreciated on decent volumes. How would you map the price action in Mahindra & Mahindra Financial and Bajaj Finance?
See, basically, Mahindra & Mahindra Financial has been consolidating in this 290-300 zone. And, from there, I'm hoping that we will see levels of 350, 360 on Mahindra & Mahindra Financial. On the other hand, Bajaj Finance, again, strong Bajaj company, likely to retest 1550, 1560, which is the previous highs. So basically these guys are doing much better than the banking stocks also. So probably on dips, both look like buys.
Stock ideas for tomorrow morning, and for that Navneet is standing by.
Hi Nikunj, while the dealers are suggesting to buy into TTK Healthcare, there's a buzz that the company would be announcing a merger of its subsidiary company with the parent company, and also there is a buzz of private placement where companies are looking at fundraising. And also if you look at the counter, it's not given good returns actually on YTD basis. It's down by about 2.4%, but on this particular news, dealers are suggesting to buy into TTK Healthcare. The other stock is InfoEdge, which is trading at rich valuations at PE multiples of about 46 times, but it seems the dealers are saying the core business of the company, Naukri.com, will be a short-term trigger for the company. If you look at Naukri.com, that contributes over 70% to companies' revenues. And also if you look at the demand for IT, that's making a good comeback. And also institutional interest is quite high in this company. Institutions hold about 38% in the stock. And well, if you look at the YTD returns also, that it's given good return of about 26%. Going forward, dealers expect about 5 to 10% returns on InfoEdge.
Right, lovely. Thanks a lot for that. Ashwini Gujral, what are your top ideas for tomorrow morning? How would you advise traders they should allocate capital?
Well, Jubilant Foodworks can be bought with a stop of about 1310. Look for targets about 1375. McLeod Russell is a buy with a stop of 284, target of 306. And Tata Motors DVR is a sell with a stop of 205, target of 190.
Mandeep, give me your top investment ideas. I'll keep the market cap constraint open and I'll keep the timing open.
I think if you look at the mid-cap space, I think two spaces are worth investing broadly. One is the textile space where we've seen some momentum come through. And if you even want to play safe among the larger companies, we've seen Arvind Mills or Vardhman Textiles. I think these companies will keep on doing well going forward, given the rupee advantage which we've gained over the Chinese currency. The second theme could be in these transmission tower companies, and that's one theme I've been playing, where we've seen the promoters have been buying into some of these companies, and some of the other ones have been getting strong orders. The valuations are really cheap in the historic context. So these companies like KEC or Kalpataru, they still have a lot of value in my view. So investors need to pick out these kind of companies in the mid-cap space. In the large-cap space, my theme would be broadly telecom, where I believe a company like Bharti, which has not participated so much, could start participating going forward. And over the slightly longer term, people should keep a lookout on public sector banks, because as economic recovery takes place and as things start to improve, we'll see balance sheet improvements come through here.
Right. Jyoti, let the final word be yours. What's the bottom line here? Is it a good time to make money? If yes, how should one allocate capital?
See, markets next year should do well, but yeah, there are two events which will, cloud the whole market over the first 6 months. One is going to be tapering in the US, and the timing of that is like a question mark, but we expect it to come in March of next year. The other is going to be the election. But I think, investors should keep using corrections in the market to put in some money, because market has not given returns over the last 4-5 years, and the next few years could be better than that.
Well, gentlemen, really appreciate your time and thank you for joining us.